going on, everyone? Hootmoney here with another video for you guys today. Today, we're gonna be going over Harbor Custom Development, or HCDI stock, because we found a rare occurrence in the stock market where a stock that is highly shorted also has deep fundamental value, and I'll be showing that to you guys in today's video. So what that means is that we have found a short squeeze stock that doesn't really have the same downside risks in the long term from holding this thing as like a long-term investment, right? You don't have to play it for the short-term swing. You can actually hold this company long-term, and the fundamental value is there for you as a shareholder. So regardless of the short squeeze is just a bonus. I think this is a good company, and I'll be showing that to you guys in today's video. So drop a like on it if you guys enjoyed this content. Subscribe to the channel if y'all are new. And with that being said, let's jump right into it. All right, so before we get into the chart and the short squeeze analysis, we're going to be talking about what this stock really is, and that's a fundamental play. So Harbor Custom Development is a real estate development company, and they recently ran on the news of them restating their fiscal year or full year 2021 earnings, but also they mentioned that they did secure 6 multifamily projects totaling $278 million with Kidder Matthews, and it moved up on very low volume, as you guys can see, showing that this was a very strong fundamental catalyst for the company. The next day at market open, there was tons of volume. This is likely where a decent amount of short sellers entered into new positions, also covered their old positions. They're usually able to hide it with the least amount of volatility during periods of low volume. So on 422, I suspect that's the reason that it saw tons of volume and tons of volatility. Now, given that this is a real estate development company working in multifamily houses, that's basically where they're specializing, and we're in an environment where rental rates are just absolutely increasing like crazy. This is already set up to be a good company, but we have to look at their financial statements. So this is where it gets real juicy. We'll jump into the balance sheet. They got $25 million there in cash. They've got $134 million in fixed net assets, or fixed asset nets, $4 million in long-term receivables, $1 million in other non-current assets, moving them up to total assets of $169.7 million. They also don't have any goodwill. They don't have any intangible assets. So for the most part, these are very solid assets that they can liquidate for what their total asset value is. And I really like to see that in a company. Sometimes companies will just fluff up their goodwill or fluff up their intangible assets, which aren't really real assets that give the company value. So things like patents and other intellectual properties, as well as the excess amount of money that you pay for a business, will fall in goodwill and intangible assets. And those are things that are not really easy to liquidate. Like if you acquire a business for a premium, like your Elon Musk buying Twitter, you would put that in your goodwill as an asset, right? But you can't really liquidate the excess amount of money that you spent on a company, right? So I really don't like when I see a ton of goodwill and a ton of intangible assets opposed to like actual real tangible assets, which what we're seeing in this balance sheet. So that's why I really like this balance sheet. Most of their liabilities are in accounts payable. They've got $48 million there for notes payable, and then $10 million for other payable. This brings them up to $68 million of non-current liabilities, and this is huge because pretty much all of their liabilities are non-current, meaning that they aren't due within the next year. And that's very important because there's not much financial strain for the company to make ends meet within the current year. And then if we are just looking at total equities alone here, they're at $99.74 million, and this is all of tangible assets. So their tangible book value is $99.74 million. If we're looking at their market cap, they're at $32.36 million. Even smaller if you're looking at the free float market cap. So this company is trading at an extreme discount. I mean, you can just do 99.74 and then divide it by their market cap of 32.36, and you'll see that this company is 3.08 times undervalued compared to the actual tangible assets of the company. So on top of that, they've actually been posting a profit for shareholders each and every single quarter, at least the past 3 quarters, as well as increasing revenues. So their fully diluted earnings per share was actually 4 cents last quarter alone. If you average that out over the whole year, that would put it at 16 cents per year. If we divide that by the share price of $2.45, that's about a 6.5% return on your money per year. The S&P 500 on average returns 7% per year, right? So this is an actual fundamental investment, my friends. And on top of that, this is fully diluted. The company is not currently fully diluted. Fully diluted means that every single share that will possibly be in circulation will be in circulation. And this is the return that you'll get. You'll get the 6.5% return on a fully diluted basis. The company is not fully diluted. And in fact, we can go into Dilution Tracker right now and see where potential dilution could occur. As you guys can see, we can get it from the convertible preferred or the warrants. If we're looking at this though, the warrants have a strike price or exercise price of $2.97 per share. The rest of the warrants will have $5 per share. So there is some upside before these warrants actually can get exercised. On top of that, it's from the convertible preferred, but this is convertible at $4.50. So again, there is some more upside before this part gets risky. So moving back to the calculation where the fully diluted earnings would give you about 6.5% return on your money per year. Right now, the company is not fully diluted. So you can actually expect almost 3x of this return at the current price level, assuming that dilution does not occur. And that would put you at almost a 20% return on your investment. And that was basically just going off the assumption that being a fully diluted company would raise the shares outstanding by about 3 times. The main concern of risk for HCDI is the fact that there are these warrants hanging above their head at $2.97 and etc. But at the end of the day, what needs to be considered is that on a fully diluted basis, if all of those shares were in the market, and I'm just summarizing it one last time for you guys, the company is still making ample returns for shareholders. So this is a truly deep value play with actual fundamental value, even on a fully diluted basis, which is extremely rare in the short squeeze niche. And I needed to bring this to your guys' attention. I'd like to thank Bored Billionaire on Twitter. You guys should go check him out if you guys have not already. He put me onto the play originally. I helped him out with some of the due diligence, so it is definitely worth the follow. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running a promotion where all you have to do is deposit $1 on their platform. You can get up to $7,000 in free stock, but you can only get it using the links below in the description or pinned comment section, so make sure you guys click that first. But yeah, you can potentially get an Apple stock, Amazon stock, Google stock, you name it, you can get it with your deposit. And if you deposit an additional $2,000 on the platform, you'll get 3 more stocks valued up to $3,500 each. And for the month of April, I believe, I'm not sure the end date of this promotion, but if you do deposit $2,000, you'll also get a free share of Twitter on top of that. So links are below in the description or pinned comment section if you guys wanted to check that out. But let's get right back into the video. All right, so just doing a brief look of the chart right here, it does look like it is in some type of accumulation. I'm not going to go bet the house that this is some type of reaccumulation pattern. However, it did show that it did have a spring right there, and also the testing phase, which is pretty common in an accumulation. Also, this company does not have any options. So similar to RDBX, we could pull up RDBX. That's another stock that doesn't have options. This stock could also go very parabolic in a very similar way. Looking at the Ortex data, it has been jumping up very significantly over the past few days. It rose from 22.86% short interest as of the last settlement date to 26.45% short interest. And today we are finally seeing the cost to borrow start to pick up. Over here on Fintel, it is the number 2 short squeeze score with a 98.91 rating. The short shares available is 0 as of 5 hours ago. And as you guys can see, the short borrow fee has been heating up very, very significantly as of today, going up to 40 as of yesterday from 13%. Here we have the short volume ratio over the past week or so. It has been heating up and it's been over 50%, which is absolutely extreme, especially considering that this has been pretty much fully utilized pretty much since 2021. So I don't know where they find all these shares to short, but it's probably not legit. And they can't hedge by using call options like other stocks. Also, the short exempt volume has been picking up very, very aggressively since 421 right there. And then on 422, it was absolutely insane. What you probably saw here was a very large short cover, but then a bunch of market maker exemptions come in on 422. And that would probably explain why the short exempt volume was so high on 422. Now, also remember, they only have 6 days to cover those short exemptions. So from 422, 1, 2, 3, 4, 5, 6, that would put it at 5.2. So yeah, guys, I think this is a good bet regardless of whether or not you're going in it for a squeeze or if you're going in it for a actual good fundamental play. I mean, we can just look at other companies that are short squeeze stocks and look at their financial statements. And I'm not saying these are bad plays. I'm just saying the company's financials don't really hold up to the fundamental value. So Ethereum's at a $333 million market cap. Their total equity is fair. It's at $224 million. But if you look at their goodwill and intangible assets, that's where all of their equities come from. So essentially, if you're a shareholder of the company, you're only basically getting the excess amount of money that they paid for an acquisition or things like patents and intellectual property. You're not actually receiving tangible assets such as cash, such as inventories, etc. Right? So a lot of their equities is comprised of intangible assets, right? So you have to understand these things as a shareholder. They are increasing revenues, but if you're looking at their diluted earnings per share, they're posting negative earnings, right? And the reason that they do diluted earnings per share when they're having negative earnings is because, well, that spreads out their losses. It makes the loss look smaller than it actually is on a non-diluted basis. RDBX, another company with an absolutely insane setup. Watch out for distribution playing out. It is giving up this support level at 360 if you guys are in that play. But if we just do the same thing, look at the financial statements. They have 123 million in total equities. It's mostly comprised of the long-term investments there. I'd have to dig into their SEC filings to see what exactly that is. They don't have any goodwill or intangible assets, which is really good in my opinion. But when we're looking at total revenue, it does say that they are posting 0, and then on a fully diluted basis, they have a 10-cent loss per share. I'm not sure if this is 100% correct. Again, I haven't really done a deep dive on RDBX like I have on HCDI, but obviously you guys can see HCDI is looking a little bit more attractive. BRQS, I think I'm going to make an analysis on this stock later today. They have a decent statement. They have about 7.61 million in total equities right there. They have a little bit of intangible assets, whereas at 2.83 million, so it's not quite as high. But if we're just comparing total equities to the market cap is extremely higher. So tangible book value is much lower than what this stock is trading at currently. And I'm not even seeing an updated income statement from them. Not 100% sure why, but that's probably not a good sign. Mullen, this is another short squeeze stock that has absolutely atrocious fundamentals. Negative 10 million there in shareholders equity. $360, yes, $360 on their balance sheet. The revenue went from $33 million to 0 as of last quarter, and on a fully diluted basis, they lost more dollars than their actual share price was. AMC, they have negative shareholders equity, so $1.79 billion of negative shareholders equity. They have 2.3 $43 billion of goodwill. So you can essentially just subtract that from this number. So they're really even more deep in the hole than you would have expected. They just have that big goodwill cushion there. They lose money. So on a diluted basis, they lost 26 cents per share in the last quarter of 2021. And if we're looking on an annual basis, their revenues don't even match what they were in 2018. They were at 5.46 billion and now they're at 2.53 billion, which is over 50% less revenue. GameStop's a bit better, no goodwill, no intangible assets. They have positive shareholders equity, so $1.6 billion right there. However, they're still trading very much above their tangible book value and they are still losing money as a company. And just moving back into HCDI one last time, they've got 100 million in total equities, which is about 3 times higher than their market cap. It's all tangible book value because they don't have any goodwill or intangible assets, and they've been increasing their revenue, and on a fully diluted basis they will be returning about 6.5% to shareholders, which is none of these other companies have been doing. And the point of this video is not to rip on other companies. I still see plenty of opportunity in a ton of different stocks that have high short interest, obviously, but this is a stock that you don't even have to see it as a short squeeze. If you wanted to, you can throw it in your long-term portfolio as well, and it is still going to be achieving a very nice result for you. The short squeeze is honestly just a bonus on top, and this stock has a low float, small market cap, and can really get going if there is a short squeeze push. Again, the only real risk that I see in this stock is the fact that there are warrants at $3 a share, there are warrants at $5 a share, and then the convertible preferred at I think that's at around $4.50. Forgive me if I'm wrong on that, but still guys, fully diluted, it's still returning good money, and those exercise prices are well above the share price. So there is definitely some upside until then. This is sincerely one of those rare best of both worlds opportunity where you're not giving up a fundamental investment so that you can invest in a potential short squeeze. It truly could cater to both long-term investors and people trying to make a quick buck on a short squeeze. This is super rare in the stock market because most of these companies that have very high short interest, quite frankly, are dog shit. They're just not good companies, all right? So this is a very rare occurrence. Anyways, that's about it for the video. Drop a like on it if you guys enjoyed. Subscribe to the channel down below if you guys are new. Hit the post notification so you never miss an update here on this channel. And check out Moomoo if you guys want up to $7,000 in free stock as long as you guys deposit $1 on their platform. Also, check out Hootmoney trade alerts if you guys want to see all of my buy and sell orders. You can see stuff like HCDI before I get in, but that is the first link in the description. That's all I got, my friends. I'll be seeing you guys next time.